Good afternoon, ladies and gentlemen, and welcome to the Amiga Diagnostics Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions and press send. Given the significant attendance at today's meeting, the company will not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll email you when they are ready for your review. I would also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful, as will the company. And I'd now like to hand over to Chris Lee, CFO, and Colin King, CEO from Amiga Diagnostics. Good afternoon to you both.
Good afternoon, Mark. Good afternoon, Mark, and thanks again. And thanks everyone for taking the time to listen to our interim result presentation. I really do appreciate everybody taking the effort to join us today. And what I'm going to do is I'm just going to switch the camera off so everybody can focus on the slide deck rather than looking at our two ugly mugs. So I'll just switch it off and we can get started. Before I sort of dive into the presentation itself, I just really want to appreciate the news today. The Department of Health is both a major concern and a disappointment, which we just want to echo that we share that disappointment. I think a lot of our staff have put a lot of effort to get our facility ready to accept a test and produce it for the UK government. That is, I think, as we stand today, is highly unlikely that will happen. So I think as a business for us, what we've got to do is that's happened. It's not good news, but we've really got to focus and look forward as a business and what can we control and how we move forward. So I think in terms of COVID, we do have our VISITECT brand. As we announced earlier on this month, we've got a relationship with DAM that is, I think, as you'll hear in the presentation, something we can build on and really grow and move forward from. And there are further commercial opportunities once we receive self-test approval. And again, as I've said, in multiple presentations in this platform, is that we shouldn't forget about our core business as well. We're not just a COVID business, and I think that's a key point that we really want to try and get over. And I think we've made excellent progress in the last 6 months in our core business, and we can look forward with confidence in terms of long-term growth opportunities for both areas. So with that, I'll just move on and into the presentation. This is obviously the first time that myself and Chris has presented. Chris has just joined us. Really pleased to bring him on board. I thought it might be appropriate for Chris just to give a little bit of intro to him and his background and why he joined us, I guess.
Okay, thank you, Colin. So my name is Chris Lee. I've now been with the business for 3 months, joined at the end of August, with the daunting task of taking over from Kieran, who was CFO for 19 years. In my early career, I spent 15 years at KPMG. The bulk of that time was in their M&A practice, primarily doing due diligence for large corporates, public companies, and private equity markets. I jumped ship to join a client in the poultry industry, where I spent 10 fun years acquiring a number of businesses and growing their European practice. For the last 7 years, I've been involved in public company markets, mainly on AIM. My first business was very close to the site here in Alva, a company called Superglass that makes glass wool insulation. That was an interesting business, a turnaround, a cost reduction, a placing, and ultimately a sale to a private investor. And then in the last 4 years, I've been working in a company called Indigo Vision in Edinburgh. They design and manufacture CCTV systems for the high-end market. That was, again, a turnaround, a sales growth, a cost reduction, and a sale ultimately at 3 times the share price on the day I arrived. We sold that business to Motorola last year for around about £31 million. I see some similar characteristics in this business to my last 2 roles in public markets. I see underlying here a decent health and nutrition business, profitable growth prospects, scope for expansion, both geographically and in the product range that it has. I see an emerging and developing CD4 business that's starting to gain some traction and has strong relationships with NGOs, World Health Organization, Clinton Health, etc. But very much at the moment on a growth journey, currently subscale for the factory that we're in, but with a long-term market opportunity that I think we can capitalize on. And I see an opportunistic COVID business, which has taken up a significant amount of time and management resources over the last 18 months and has unfortunately not delivered the return that everybody hoped it would. But I do see scope for growth in our core business. I see scope for operational efficiencies and process improvements outside of just the top line growth that's potentially available. So I look forward to getting stuck in and helping Colin drive the business forward.
Thanks, Chris, and again, hopefully that gives you a good overview, Chris. And I think some of the key reasons why when we went through that recruitment process, we felt Chris was the right person to bring on board and work with me and grow this business as we move forward. In terms of the presentation for this evening, very similar to previous formats. I'll give a very quick overview of the core business or the business for anybody that's new to the story, and then go into detail in terms of an update on our health and nutrition business, VISITECT CD4, COVID, and then and our global health expansion plans. I'll then hand over to Chris, who will go through the financial numbers, and then we'll end up with a summary. Once we've gone through the summary, we'll end up going back to the sort of question and answers that have either come in prior to the meeting or have been coming in during the meeting. And again, I'll just reiterate in terms of on the questions what Mark mentioned. As per previous, the last 2 or 3 times we've done this, we are committed to we will pick up the questions and we will answer them. The last time we received over 300 questions, so please bear with us while we work through them and respond to them. But we will make that promise that we will answer those questions, whether it's sensible to answer. So in terms of an overview of the business, as I kind of alluded to, we have two business units: a health and nutrition business and a global health business. Our health and nutrition business is really focused on gut health and in particular food sensitivity and helping manage people with long-term chronic illnesses that are related to gut health. And this is, as Chris alluded to, one of our is a most profitable business and what generates today the largest revenues for the group. We also, in terms of our global health, we have a VISITECT CD4, and VISITECT CD4 is a test that's used to help manage people living with HIV. It is the world's only instrument-free CD4 rapid test, and it's been developed deliberately to go into low middle income countries and reach places where the current tests can't reach, basically. And again, hopefully through this presentation, you'll see where we're making good traction with that. It's a key and initiative for the World Health Organization as well. So we're really proud to be partnering with the World Health Organization and the NGOs that sit around that to support this initiative, because it's clear it will make a huge difference to a lot of people that are less fortunate than we are in this country. And then obviously we have our COVID business as well. Then this division looks after that. We have a focus on both antibody and antigen lateral flow tests, and we also offer a lab service for antibody testing. In terms of health and nutrition, in terms of sales, I think really encouraged. We mentioned that in July that we could see that we're confident that the business was recovering back to pre-pandemic levels, and really pleased to see that that continued through to September. Sales are up 62% in the prior year to 4.2 million. And I think more important than that, that 4.2 million aligns with our pre-COVID revenues. So that's really encouraging. And as Chris will show later on, what's even more encouraging is that the number that we had in FY20 was actually included Chinese revenues in terms of stocking orders, which is not followed through from this number either. So in real terms, the percentage growth excluding that Chinese stocking order would be somewhere around about 160%. So really pleased with that. And I think really what's even more encouraging is that the growth is coming from not one country, it's coming across the globe, it's coming from North America, Europe, and also in Asia, Middle East and Asia as well. So that's great. And I think the other key point is during COVID, our team spent a lot of time building up education webinars and educating our end customers on the benefits of food sensitivity testing. I think what we've seen is some benefits in even what we've always viewed as a mature market, which is the European market. And we actually saw some footprint expansion in that territory, where we actually placed around about 5 new systems in there. So again, what we can see the benefits of some of our growth strategy coming in an area where we actually viewed it as saturated or mature. So that's great news. I think that the one slightly disappointing news, but probably when you take a step back and think about it, it's no real great surprise, is our Chinese partner. We had expected to see some demand coming in the first half of this year, and unfortunately, basically they've overstocked, and they're working through the stock that they currently have. The reason for that is they were building up their stock over the last couple of years in preparation for market launch. The market launch actually took a little bit longer because COVID kicked in, and that delayed their approval processes. But by then they'd already committed to procuring, because it's quite a long supply chain that they work through, to procuring those tests. So those tests were already in China. And then, once they've launched towards the end of last year and into this year, what they're finding is that, they're basically putting into the market a new test that is, it's a new concept. They're going direct to consumer, using social media, etc., to drive sales. With obviously the pandemic, they're finding that gaining that traction is still slower than they had expected. As I say, you take a step back and think about it. Given what they have achieved in the middle of a pandemic, it's actually really impressive. They continue to invest large sums of money into this area because they do believe strongly that this is a unique opportunity that they have, and they can see that growth will come. So they remain confident that long-term growth will deliver on what they promised, and we expect to see growth rematerializing during FY23. Another key area that we've talked about before is the US. In terms of the US, it's the largest market for health and nutrition by far, and it's an area where we don't really have a presence there today. We're very minimal. We worked with a couple of partners that hasn't really quite worked as well as we expected for a number of reasons. We basically, during the last 6 months, we sat back and looked at, why is it we've not got that traction? What is it we can do differently, and how can we improve it? Because it's a key market for us. So one of the actions we took was we've got someone on the ground in the US that specialises in this area. We brought them in as a consultant. We're using their knowledge and skills to identify potential partners for us. Not just in terms of lab partners that can run our footprint product, but also actually people that can actually take the product to the market and actually grow our revenues as well. So that's an area that they've been working on with our sales director. And really we're getting to the stage now where, and it's great that travel's now allowed into the US, because we can now actually go into the US, meet these potential partners, and start to square off, basically select who we want to work with. And that's something that we will be undertaking in the coming months ahead. So again, our expectation is that we will see the US strategy coming into play during FY23. One thing that we're also exploring is the potential of setting up our own laboratory, but that's in the very early stages of exploration. in terms of looking at what the cost impact would be, etc. But it is one thing that we are considering, and certainly haven't ruled out to take more direct control and more margin as well. The other key thing is that we're finally coming to the end of our purpose-built facility, and we are looking forward to moving into that facility in early 2022. And obviously that is key to allowing us to support the growth that we expect from China, the US, and our other strategies as well. In terms of our strategies, again, it's the same slide as we used in July. We're just again repeating what we are, the areas that we really want to focus in. Is basically three areas: organic growth, geographic growth, and menu expansion. In terms of that organic growth, it's really focusing. I've already touched on that kind of the webinars that we've run in trying to make our customers aware of how to educate the market with our product, and that's something that we'll continue to do. It's been very successful for us, but we're also looking at in terms of how we can embrace the digital technology better, and that's something that we've been working on, and hopefully I expect that we can make some announcements on that towards the end of this financial year. In terms of geographic expansion, I've already touched in terms of China and the US, and I mentioned about Europe. That's probably a good example of what we've been doing is analysing each country in terms of what do they actually sell? Do they sell both products? Do they sell Foodprint and Food Detective? Is it mainly Food Detective, Foodprint, for example? And what we're looking to do is that those countries actually get to the position where both products are in a country. We can use Food Detective to generate the initial demand, and then the add-on sell on Foodprint, which is our it offers more foods and it's a higher margin, a higher revenue business. So that's kind of what we're looking at as well. And I say it's great to see some early success in Europe and what we thought was a mature market. And then finally, in terms of where we see growth as well, is in that menu expansion. And in particular, as I say, our focus is around gut health. It's an area which is, there's more and more information coming out around gut health and how important it is. It's probably the one area of the body that's not fully understood yet. And our food sensitivity is tackling the sort of leaky gut problem. But there's other things around gut health and general inflammation that we can look at, and 2 or 3 markers that we are really interested in getting an access into, and then delivering it and selling it through our sales channels are microbiome, nutrigenomics, and micronutrients. So that's something that we're actively looking at just now in terms of how we can gain access to them and then bring them to the market as well. So that's our food intolerance, our health and nutrition business. Hopefully that's given you a good overview of where we are, and really why I said earlier on that we are really pleased with the progress we've made in the last 6 months, and also more important, as we look forward, we can see where this business has huge growth potential in the coming 2 to 3 years, and really looking forward to getting back to that annual double-digit growth that we were so used to pre-COVID.
Colin, I would probably just add here, obviously a lot of the management resource and investment has gone into COVID over the course of the last couple of years, and I guess there would have been an opportunity otherwise to be able to divert that attention into our food intolerance business. So we're hoping that we can return back to supporting the business in terms of growth and some of the things Colin's talked about on here. So, things like expansion into the US, expansion of the menu, the digital platform that we're implementing to get us closer to the consumer. Those sorts of things are likely to help drive growth in that particular area, but it's been a bit starved of resource, I guess, in the last 18 months or so.
Yeah, thanks, Chris. So moving on in terms of our global health division, starting off with CD4, and again, really pleased in terms of the direction of travel here and the momentum that we're gathering. Again, so in terms of clearly the sales for the first 6 months was just short of a couple of £100,000, not overly exciting, but I think what makes it exciting is the fact that our actual committed orders, so orders that we have received takes us to around about the £1 million mark, and obviously our expectation is that we will receive more orders in the coming months as we roll out towards the end of this financial year. So really happy with the progress, and then to me that's key, that's indicating that we're starting to build that momentum that we've always known is there, and it's now rolling through, and hopefully over the next couple of slides I'll give you a feel for how that's building up and why we genuinely believe this is now happening for us. I think in terms of the products now being in the market for 12-15 months, and what we're building up is it's been involved in a number of clinical studies, and also actually just the general use of the test in the countries that the test is being routinely used now. And the feedback that we're getting is that this is an excellent test. It delivers exactly what it's designed to do, and that is to get the test into parts of the countries that the current CD4 test can't reach. So, and give the performance in terms of finding those people that are living with HIV with low CD4 counts that are below 200. That ultimately, if they're not found, they will die, unfortunately. And what we're finding now is with this test, we can get closer to them, we can find those people, and hopefully it gives them some longevity to their lives. So I think it's great that we're actually making a huge difference to people that, as I said, that are significantly less fortunate than we are. And a key part of our offering is we developed this global learning centre. I mentioned it in July. We've rolled that out now. This is really key for us in terms of getting our users to understand how to use the test. Because it's not a normal lateral flow test. It's probably it looks like a normal lateral flow test, but inside those bits of plastic, is probably the most complicated lateral flow test that's actually on the market in the world today. So, we need to make sure that the people that are using it, professionals that are using it, understand, how to interpret it. We've now rolled this platform out across 14 different countries. We've got over 400 users registered and trained on how to use this platform. These users are you can view them as super users, so they would then train the trainer in effect. So you can see where you can then get that rollout as you move from one country to the next. We've increased the number of tests that it's now approved in. We're now up at 21 countries over 37 strategically important countries. We've got initial demand from 15 of the 37 countries, and I'll touch on that in the next slide in terms of where we see and how we see that building. And I think importantly, obviously, this is a new product. We've validated it, and we're starting to manufacture it now in routine manufacturing during the last during this financial year. Like any new product that you bring in, there's always teething problems as you go through that manufacturing process, and I'm sure Chris will touch on it in terms of some of the impact it's had on the margin because of some of the increased costs that we've had as a result of that. That's just part of that introduction process. I think we can now see that those issues that we're having in the early days are now reducing, so we don't expect that to repeat itself. And what we're doing is now focusing on the original batch size was validated to meet that initial demand. We can now see where the demand is growing, so we're now looking at increasing our batch sizes to support that long-term vision of 4 to 6 million tests per annum. And finally, the other thing is we do see areas where we can improve margins as well through some raw material and some subtle changes to the test, and we've got a team focused on that, which will drive those margin improvements as well. But I think overall, really pleased with how we're doing, and to say very confident that we will get to that 4 to 6 million tests within the time frame that we've stated. In terms of our sales strategy around CD4, as I've again mentioned many times, we've got 3 strands to this strategy. Unitaid and Clinton Health, or CHI, they're really the organisations that are driving the initial uplift in the test. If you remember, they were given from the World Health Organization, have this initiative around advanced HIV disease management, and Unitaid and CHI were given the contract to implement that strategy. And CD4, our CD4 test is included in that program. It is the only CD4 test that is included in that program. So there's no other test that's in there. The contract we signed and their plan is, there's a potential for it to extend to up to 130 low middle income countries. Their focus initially was on what they called early adopters, and get those early adopters in place, and then and get the processes and procedures, etc., in place and rounded. And once that was in place, secure long-term funding in those countries, and then move on into the next batch of countries. I'm pleased to say that where we've got to now is that initial target countries, the test is now implemented, it's in use, and we're now seeing long-term funders such as PEPFAR coming in behind them and providing that funding in those countries, and their focus now moves onto new countries and getting the test implemented. Again, that focus, if you think of the classic 80-20 rule as well, in terms of where you see that demand, where the most need is, that's where they're focusing in those countries as well. So we're targeting the right countries initially, and I say really pleased to see that PEPFAR have actually placed some initial orders for the product as well in two of those 7 countries, and our expectation is that the other 5 countries will follow in the coming months ahead. So again, great progress there, and I think also as another part of our strategy was obviously MSF, and they've been a long-term advocate for the test. It was them that sort of really pushed us to develop this test. If you remember last time, we had a six country order from them. We have now delivered that to them, and they're now in the process of implementing it. So it's very similar to what Unitaid and CHAI have done as well. So they've got 6 countries that they're rolling the test into, and we're actively supporting that deployment. Once it's deployed and once they have that infrastructure in place, they'll then look to roll it out into other countries. And they're active in more than 70 countries worldwide. So again, good scope for growth there as well. And then finally, in terms of the UN, this is one that we've always said will take a longer. It's a longer view of the world. It takes longer to get them up and running. We've got the WHO approvals, which allowed them to start that process. What we've been working with them is we're now included in the supply catalogue, which was one step. We've just received the framework agreement is in place, which basically allows UN agencies to procure the test. So the next step is to start. We should expect to see RFQs coming for advanced CD4. And then obviously once those RFQs are issued and submitted and approved, then we should start to see purchase orders coming. So we really expect to see those purchase orders coming in during FY23. I would not expect them to come in this second half of this financial year, but certainly we do expect them in the new financial year. So that's really CD4. Hopefully that's given again a good overview of why we are really excited about the progress that we have made, and also as we look forward, the progress that we expect from this test. In terms of the tests that sit around that, what we'll be looking at, again, I introduced this concept in July. What we'll be looking at is tests that basically complement CD4. So once you've run CD4, you've got a patient whose count is below 200, and they want to understand what potential infections they have. They then look to these tests that you see in the slide, and then we'd run those tests. So we started development on a cryptococcus test. That's going well. We've got a stage where we think we've got a pilot test, and we're about to send it out into Africa for initial screening and to see if we actually, it's doing what we expect it to do. Our expectations will probably have to tweak something from the initial feedback, but that should be minor. But we're making good, from what we can see, we're making good progress with that test. And then in terms of the other ones, what we're looking to do is just determine whether or not we actually develop in-house or we in-license. And there are other companies who are developing tests in these areas, and we see opportunities where we can potentially in-license, and that's something that we're working through just now as well. So again, let's see what comes over the next sort of 4 to 6 months in that area. And then moving on in terms of COVID, as I touched on, I guess for a lot of you listening, that's obviously why you invested in the company, and I do understand that. I've kind of already touched on the DHC, and I will go into that in a bit more detail in a second or two. What I've done is just split this up and just trying to give you a feel for where we are in terms of regulatory and commercially, where we see the opportunities. In terms of the VISITECT COVID antigen test, which is really the one where we see our greatest opportunities in the market as we look forward. Clearly, we have the CE marking for the professional test, and what we're waiting on there is the UK approval from the DHSC. I think we were, like a lot of UK companies, we were pretty disappointed that first of all that legislation came into play, and secondly, having submitted our information within the time frame and paid the money that they requested, to not have received the necessary approvals by the time that they introduced the new legislation was, let's say, extremely disappointing. We are obviously pushing them for a response, and we hope to receive that, but it's again not something that's fully in our control. It is with the Department of Health in terms of when that will come, and obviously that will open up supply for DAM in the UK market. Obviously, DAM can obviously supply outside of the UK for that professional test. Again, I'll touch on that in a minute. In terms of self-test, again, I think we're making good progress. I saw some of the questions that were coming in before, and I understand perhaps the frustration around why is it taking so long, and maybe that's a fault on ourselves and how we've communicated that. I think in generally in this industry, the approval processes are something that are not under your control. You're working with a notified body or a country who are a regulator. They have their own processes and their own timelines, and it's not something that we can control. In terms of the self-test, however, as I mentioned back in July, we when we had first indicated that we thought it would be the end of July, in terms of that approval process, we did update everybody in terms of, there was new legislation that came in within Europe that required additional studies to be done. Luckily for us, it was just before we had completed and gained ethic approval. So we had to go back and update our protocols and then gain that ethical approval. Then we obviously ran the study, and that was the study that was run in Ulster, which was very successful. We then had to analyse that data, and then we obviously then submitted towards the end of August, early September. In terms of where we are today, obviously that data was submitted into the notified body. Basically, what happens is the best way I could probably try and let you visualize this is kind of like a filter. So we've obviously supplied quite a lot of information on our product to that regulator. They obviously have to review all of that information. And as they review it, there will ultimately be questions. What you want is that you're hoping that the questions are minimal and easy to answer. We received a number of questions in terms of the feedback on what we submitted, and I think again, and when I look back, it's probably wasn't unexpected because this test was developed at such speed. There was going to be questions that were likely to come in. So we basically, what we done is we took those questions, we worked through them, we answered them, and then we fed that back in. And it's been an iterative process. So as we've got the answers, we've been engaging with the notified body and sending them in. So they went in, and then basically, they've reviewed those answers, and then there's some questions come back again, and it's just like a filter where the number of questions that are being asked is reducing each time they ask a question, and then we supply a response to them, and then that can prompt another one. Where we're at just now is we're kind of getting to the end of that question cycle. We're not there. Our expectation is that we're getting close to that end point, but in terms of giving a time frame, it's not something that we can really do, because as I said at the start, there's a process in terms of the notified body. They could ask some other questions, we're not in control of that. So until they're really happy that they have, we've answered all their questions, then they would then obviously then look to approve that. As I say, so I'm not prepared to sort of give out any guidance of when we expect that. But what I would say is that we are making very good progress in answering the questions that are coming in, and as I say, that filter is narrowing as each day progresses. And that obviously will be key in terms of how we commercialise and drive revenues going forward. In terms of the FDA, obviously this is not a submission that we're in control of. It's a partner with Logic. What we are aware of is that the FDA have come back and asked very similar. They've asked questions, and Logic have been answering those questions. One of the questions that they've raised has resulted in a requirement to get some additional US specific data, and that is something that's being gathered just now. Obviously, once that data is gathered, we will resubmit that, and then we'll keep that process going. So again, at this stage, can't really give a time frame on when to expect that. Again, one area that I'm aware that we've had questions coming in from shareholders is what are we doing with FDA self-test? Obviously, the market is moving towards self-test. What we're looking at doing is a feasibility study. We started that in terms of understanding the studies that would need to be done, and also the cost that would be involved. That may well be prohibitive in terms of the cost of doing those studies. We need to understand that, and that's something that we're getting our arms around as quickly as possible, and we're working with our partners, Lansdowne, on that as well. So I think, and just trying to see what we can do, and if it is possible, how quick we can get that through, and is there a fast track process? So that's what we're looking at. But as I say, don't want to promise just now, because one thing that is the cost of these studies might be a brake on us and going into the US. And then in terms of UKRTC, obviously those registers, as Abingdon alluded to in their recent announcement, the registration process is ongoing. It has been slower than I think we all expected. In July, I did use the word imminently and probably shouldn't have done. That was a mistake on my part. It was obviously an expectation that I had that didn't follow through. So again, with that in mind, I probably will refrain from making any predictions on that. So in terms of the commercial status, I think, in terms of DHSC, obviously, as I said in the introductions, it was, extremely disappointing that basically, in our view, that the contract has expired. Just to give you a feel for this, as most of you are probably aware, the contract was split into two phases. Phase one is where obviously we received the 2.5 million, and that was designed to get our facility ready, bring people in, and obviously the government was also procuring equipment and installing equipment and doing all the validations and basically getting the plant ready and operational for a test that would be licensed by the Department of Health. And that's really where the stumble blocks come. We, unfortunately, that test has not been licensed, and we don't have a test to manufacture. And in terms of that long stop date, it was originally the 1st of April. It was extended, and our expectation was that was going to get extended again. And it was really when we were going through the process of getting ready for our interims, we sought some clarity, and obviously the legal advice we got was when you looked at it yesterday was that we're in a position where we, in our view, is that contract has now expired, and where we stand today is I can't see where the demand will come from. Again, just picking up on, we obviously alluded to, we're in discussions with two companies. Again, just to give you a little bit of a backdrop in terms of that, the discussions we're having with those two companies, we, as I mentioned before, we had completed a technical diligence that we were happy we could manufacture the tests on their behalf. Both tests were approved, reporting down, and both tests were had self-test or in the final stages of self-test approval. We had reached commercial agreement, between ourselves and those companies. So obviously we were happy in terms of what that would look like. Unfortunately, as we moved into the phase in terms of the Department of Health, and one company, didn't move any further forward. There was one company that we did move forward with, and I'm happy to name that company, which was Orangene. In terms of Orangene, obviously they are supplying you're probably getting your test from Boots. They are being supplied into the UK. Basically, the decision is that they were awarded a contract, but unfortunately it was for product manufactured from China. We basically couldn't reach that commercial agreement that we wanted to. So there is potential in the future that if another award that could happen, but at this stage I don't have any visibility of that, and I wouldn't like to pretend that has a potential. So I think if it does happen, we'll take that as an upside. But I think the where I stand today, I think it's unlikely that we'll be making for the UK government. Clearly, we have equipment for that's been installed by the Department of Health. That equipment, as per the contract, is for supplying the Department of Health. As we mentioned in our statement, we are in discussions about getting commercial access for that. So if the demand from our self-test and through DAM Health and professional tests exceed our own capacity, then we will. Our aim is to get access to that equipment that's in our facility. But those discussions are still ongoing. Obviously, when they conclude, we'll advise shareholders of that. But extremely disappointing, especially I understand a lot of people came in the back of this announcements, and clearly you are losing money as we stand here today. It doesn't fill me with a lot of joy. I can assure you of that. We in my view, we've acted in our bet and always tried to be open. We, as I said at the start, we're extremely disappointed as well that we've reached this point. We've put a lot of effort into this over the last 12, 15 months. But as I said, we are where we are. We've got to move forward as a business. There's no point in looking back. Let's look forward. What does that forward look like in terms of COVID? Well, really, we weren't just totally focused on the Department of Health. We did have a strategy around our VISITECT antigen test. What we realised was that in terms of our sales channels, our sales teams, the way that COVID tests are being sold is different to how diagnostic tests are normally being sold. It's a different marketplace. We could see that was starting to develop. There's new people coming again, selling diagnostics tests that have never sold them before. Our skill set is in health nutrition and in developing low demand and low middle income countries. So we were looking for someone to help us. We engaged with a company called Lansdowne Strategic Capital. Really, the primary reason was that they have a pretty strong connections in where we could see those tests being sold, and we could see that they have the potential to help us and expand our commercial reach that we don't have. So that's really why we engage with them. We're really pleased with the way that relationship is building. The first company that they've obviously through that relationship is DAM Health. We signed that in November. Really excited about DAM Health. I think they're a really interesting company that is growing. In the last 12 months, significantly. They've done a great job in terms of they are the mark, probably maybe outside Boots or just outside Boots or along the Boots, the largest provider of in-clinic COVID testing in the UK. I think they've identified in the UK, to grow their business, they can't just focus in the UK. They've got a great network in Spain now that they've developed. and they've also got a network in Mexico as well. And I know they're very active in looking to expand into countries where it makes sense for them in terms of, and it's not just COVID as well, and that hence why we've tagged in our health and nutrition business as well into that deal. But in terms of COVID, I'm quite excited about what DAM Health can do. That they are a very proactive business. We just need to get those approvals over the line, and then we can start to look forward with confidence. And I think in terms of the other partners that Lansdowne are working on, again, there is a lot of interest in our test that they're generating through their networks. Fundamentally, we need self-test approval for those to be opened. But they are sitting there, and once we get that self-test approval, I'm confident that these other arrangements will flow through. So that's kind of where we are with COVID, and hopefully that, I understand that for most of you are extremely disappointed, but hopefully I've given you a bit of a flavour about where we can potentially, once we get these approvals, how we can move forward and through this partnership we have, and hope and see demand in the coming months ahead. And I'll just hand over to Chris now to go through a financial update.
Thank you, Colin. I'll start with just a high-level summary in terms of the overall P&L for H1. So sales overall up 81%. That's 62% up in food and 170% up in our global health business. That's an extra £1 million coming from our global health business. And as Colin mentioned earlier, just under £200,000 of that was CD4 that was shipped in the first half, with the balance being COVID related. Gross profit in absolute terms obviously increased as a consequence. However, gross profit percentage has dropped by 8.5 percentage points. The drivers behind this really are twofold: underutilized production labour and raw material wastage or scrap as we ramp up production. So in terms of the direct labour, the headcount on the Alva site broadly doubled over the last year or so, as we brought in people to deal with the likelihood of the DHSC contract, so part of that ramp-up phase. The P&L, we've actually expensed all of those costs as incurred in the first half, notwithstanding the fact that the government has provided £2.5 million worth of funding towards those setup costs. So that £2.5 million is held in the balance sheet and is to be spread over the output, if you like, recovered on a per test basis from DHSC. So none of that benefit has actually gone through the P&L in the first half of this year. On the production side, we've really been ramping up our CD4 production, as we mentioned. We're moving from small batch sizes to large batch sizes. The product has a biological component, as you might expect, and that's introducing variability into the production process. So there have been some teething issues, too high a level of wastage, if you like, and some materials that have reached their expiry date. And we've dealt with that by having a full stock take at the end of September, and we've cleaned up any materials that were at or nearing their potential expiry date where we didn't see that those would get utilized in the production process. The overall summary of that is essentially that the loss for the first half is around about twice what it was for the second half at first half of last year, at around about 2.4 million. And clearly that's not an acceptable result, and that's my key focus in terms of how we can move that business back to at least a break-even position on a consolidated basis. Moving on to health and nutrition. So as you mentioned, health and nutrition sales are up about 62%. But within this, we're having a significant effect from China. So Colin mentioned the stocking orders for our Chinese customer last year. We sold just under 1.1 million to China in 2020, but only 300,000 so far this half one. So if you were to strip out that kind of Chinese growth, the Chinese order from last year, if you like, the growth in the underlying business would be closer to 160% rather than 60%. And as we mentioned, I don't think we're going to see any significant Chinese volume coming through in the second half of this financial year. It will really be H1 FY23 when we start to see hopefully a return to a sustainable level of procurement from our customer as they're growing their demand in the Chinese market. At the high level, sales have recovered, as we mentioned before, to pre-pandemic levels, around about 4.2 million in this food business. So you can obviously see the dip in terms of 2020 for the COVID. Our growth really is driven by Foodprint. Foodprint is our premium product in this area. It has an average selling price of around about £250 a test and a higher margin compared to our Food Detective product, which is selling for maybe nearer £100 per test. So we've seen the growth in Foodprint, and of course, our Food Detective product is predominantly sold into China. So you're seeing a mix change within the food industry as well. We talked about the overstocking in China, and we've got some other sundry sales coming through here in terms of our lab, where we're conducting testing within our CNS lab down in Littleport, and a few other kind of pass-through sales and food ELISA tests coming through, just making up the balance in terms of the overall 4.2 million. So flicking over to the two core products, so Foodprint sales, as Colin mentioned at the beginning, we've seen sales growth across all sales regions and key sales territories, North America, Europe, Asia, etc. We've had 6 new system installations in H1, 4 of which were in Europe, in countries like Italy and Bulgaria, and 2 new additional installations taking place in India. This takes overall our active installations to 156. So active installations is a KPI that we look at. These are Foodprint systems where we have sold product within the last 12 months. So rather than the ones that are sitting on the shelf gathering dust. As we mentioned earlier, our strategy here is to fill in the market gaps. So we make sure we're carrying both the Foodprint and the Food Detective product in our core territories. And that's led to some of this growth, particularly within the European market. On the Food Detective sales, this really is all about China in terms of the 40% decline year on year. But we have seen growth outside of China, which has offset some of that at least. Remember as well, Food Detective is an in-clinic test. And whilst people haven't been moving around and going out due to COVID in different parts of the world, there will be an impact in terms of attendance at clinics that will be having an effect on this particular part of the business as well. Switching over to global health, we've broken our global health sales down in terms of our core products. So you can see £167,000 on the left-hand side. That's our CD4 business. We've got 400,000 of UK RTC antibody tests earlier in the year, and then the major part of this revenue stream really has been the COVID subcontracting, where we've been doing work, as I'm sure you've seen, for the likes of SureScreen and a company called PharmAct. Our COVID ELISA product, 200,000 last year, has now been discontinued, and we've got some balancing sales in other areas that include allergy, adrenal function profiles, and various recharges for the likes of carriage and packaging to some of our customers.
Maybe just in terms of the ELISA, in terms of why we've discontinued that. I mean, basically that was a test that was developed very early on in the pandemic, and that was at the time when obviously the feeling was that antibodies could be antibody testing could be a key way out of and get us back to life and normal. And it was really aimed at patients who were infected with COVID. One of the restrictions that the particular way that the test being designed was it wasn't particularly good at picking up vaccinated patients. Clearly, the UK RTC antibody test does pick up both vaccinated and people that have been infected and have antibodies. So that's why we've sort of switched our focus to, if there is any antibody demand, we believe it will come from UK RTC, and hence why we've decided to discontinue the COVID ELISA product.
Okay. And finally, just on to segmental reporting and cash. So we've broken down here the EBITDA between the different divisions, health and nutrition, global health, and corporate. So you can see there that the health and nutrition business is generating a positive EBITDA of 1.1 million, whereas global health, COVID and CD4 has lost 2.8 million, and we've got 700,000 of centralized costs for mainly kind of PLC related and shared services for the group. On top of the P&L spend, if you like, we've got development spend, and there's around about £400,000 worth of R&D that we have cash paid but have put on the balance sheet under accounting standards. So overall, in our trading business, we have consumed around about 2.8 million of cash. We've had some favourable working capital movements of 700 grand, a bit of finance, a bit of capex, and we've received in the period the £2 million I referred to earlier from Department of Health. So overall, net cash movement in H1 is an outflow of 1.1 million, leaving us with 4.7 million as at the end of September in the bank. Our cash burn, if you look at that 2.8 million spread over the 6 months, is a little under £500,000 a month. So 4.7 million in the bank, that's sort of 9 months worth of cash if we sit here and do nothing. Clearly, we're not going to go and do that. We're going to take action to address the cost base as well as try and grow the revenue. So some of the items that we've identified that we're working on right now is, as well as the growth across all the product ranges, is just to manage the labour force, particularly the temporary labour force, reduce our consultants. There'll be some natural wastage in headcount coming through as well. There are opportunities, I think, in terms of production efficiency around scrap rates and wastage, and we're improving our processes to control purchasing to make sure that we are buying the materials we need aligned with our sales forecast, and we don't run the risk of having material that might expire before we consume it. So there's a number of items that we're working on to try and drive the cost base down in the second half. In addition to the 4.7 million cash at bank, we have a £2 million overdraft, which is currently undrawn. And I'm currently working with Bank of Scotland, who are our main bankers, to implement an export guarantee process, which would multiply that overdraft facility by 4. So we'd be nearer 8 million of potential debt facilities on top of our current net cash balances. So hopefully that gives you some reassurance in terms of future cash flows. Okay. So with that, I'll hand back over to Colin to wrap up.
Thanks, Chris, and hopefully that gave you a good flavour in terms of putting some context around the numbers as well. I thought he actually done a very good job, given he's only been in the business for such a short time. So yeah, he's certainly learning fast, I would say. So yeah, just in terms of summary, I think in terms of COVID-19, I think clearly we're disappointed with the DHSC contract. However, we are excited around Dam Health and the commercial agreement that's in place, and the opportunity for them to grow their business and for us to succeed as they grow as well. And we're also confident that once we get self-test approval in place, that other commercial opportunities will be forthcoming. So that's where we are with COVID. In terms of VISITECT CD4, again, really great that we're seeing build up of momentum through multiple partner channels, in particular Chai and Unitaid and PEPFAR coming on board, but also MSF as well. And so that's great. We've got 1 million of committed orders. We're scaling up our production, and hence why we're confident of that 4 to 6 million in the next 3 to 5 years. We also have strategically identified opportunities that will sit around that test to help grow those revenues in the coming years ahead as well. And then finally, in terms of health and nutrition, I think that's really for me is a great positive out of the first half of this year. The sign in terms of the return to pre-pandemic levels of a business that generates significant cash for us. But also, more importantly, is that strategic plan that we've got to see significant growth over the next 2 to 3 years as well, whether it be through organic digital platform, geographic expansion, or that menu expansion as well. And as Chris just alluded to as well, we obviously in the first half we have been burning some cash, and more than we probably should have done, in anticipation of that DHSC build up. We will get that under control, and there will be operational efficiencies as well as we scale up with CD4 as well. So I think overall, we expect to see an improved sales performance across the group for the full year, and also to see those losses reducing in the second half. So that for me is really the end of the presentation. I'm conscious that it's now an hour and we've used the hour up. I had thought that it might have taken, we'd have had about 20 minutes to answer questions. What I actually tried to do during the presentation was deal with a lot of the questions that I'd seen that had come in beforehand. So hopefully I've dealt with a lot of the questions that came in. Clearly what we can do is we can pick up those other questions. And as I said, and Mark alluded to, what we can do is we will answer all the questions that have come in. They are all sensible questions that have come in, and we'll provide some feedback to you so that your input is valuable to us.
That's great, Colin. Thank you very much indeed. So Colin, would that be the most sensible play, or do you want to take a few moments to take a couple of questions that were pre-submitted? I think a lot of these, I think both you've touched on, and there's a lot of commonality in some of these questions.
I think, given that probably people are probably not allowed an hour, I'm happy to sort of go over. We'd obviously look through the pre-prepared questions, Mark. There's maybe sort of two or three that we can maybe pick up on.
Sure.
If you wouldn't mind, I'll maybe just sort of look at those and just pick them up directly, if that's okay.
Yeah, no, please do. And just for the avoidance of any doubt, with over 1,100 people accepting today's call, it's impossible for those questions to be answered, obviously, collectively during this meeting. But as Colin said, we will notify you by email as soon as all of those questions submitted by investors have been reviewed. And obviously, we'll make you aware by email when that's ready for your review. Yeah,
and again, I do apologise. I say we thought that this would, our terms of presentation would last about the sort of 30-40 minute mark. We've obviously overrun, but as I said, the reason we have overrun is I've tried to pick up a lot of the questions that were coming in, certainly pre today anyway.
Sure.
So in terms of maybe as I look down some of the questions that I think I maybe missed off, and I'll pick out two or three. And then we'll just wrap it up, given that we have overrun. So there was one question around, there's obviously, there was some pictures taken of origin boxes within our facility in Alva. So there's a question around, what are they, why are they there, and how much revenue will it create? So basically, as I alluded to earlier, Origin was one of the companies that we had been in negotiations with the Department of Health. During that, we've obviously developed a close relationship. They asked us for some assistance with product that had come into the UK that they needed some help with. Given that we had built up the relationship, and we agreed that we would try and help them where we could. This is very much a short-term task. It's using unskilled labour, and it will last for about 4 to 6 weeks, we envisage. And it's not utilising any of the equipment or skilled labour that we have in place. And again, I think it's probably people are aware, we obviously brought in a lot of temporary resource to do this as well. In terms of, we expect revenues to be around about the $500,000 mark, and it'll be a modest profit of around about 100K. In terms of a contribution, it was more in terms of the potential to develop a relationship with them. That could then be used in the future, that we saw why we wanted to do this, basically. In terms of some other ones, there was a question around capacity that I noticed that I didn't pick up on. So, what is Omega's current capacity per week? What is the percentage being utilised, and has it been utilised over the last 3 months? So, as we publicised our capacity, it was circa 2 million a week. And in terms of split that between UK and our own equipment that we procured, it's really approximately a third split. So we've got about 33% of that overall that capacity that is Omega equipment.
Just a second, Mark. I think there's a bit of background noise or interference that we're hearing coming through. If you don't mind.
It's about a third of our own capacity, and obviously 2/3 is equipment that is ring fenced for DHSC, and as I alluded to, we're in discussions about getting access to that to allow us to use that capacity as well. This, I would just stress that it does cover all lateral flow tests, which does include CD4 as well. In terms of stock building, shelf life is a constraint, and obviously with the unknown, not knowing in terms of time frames of approvals, etc. You've got to be prudent that you don't build too far ahead, because if you do, you end up with quite a lot of expiry cost, and which obviously is something we want to avoid. So we've had limited stock build up. So really, as a result, utilisation has been a lot lower than what our capacity is. Again, I think I touched on this in previous presentations, how we were managing that with a lot of temporary staff, and clearly, once the demand comes in, we can ramp that up over a period of time. So hopefully that answers the question on capacity. I think the other one, that there was a lot of questions around sort of communication in terms of basically, and I've picked one of them, and there was a large amount of them, so it could have been any of them I picked. So in terms of one of the questions that I pulled out was, at the last presentation, you acknowledged that your investor communications have been poor and that they would be improved. Since that time, we've all faced a stonewall silence whilst the share price continues to crash in front of us. Why do you pay so little respect to your investors, and why do you say you will improve and then it gets worse? I think we actually answered this question during the AGM, and we did post a reply in terms of what we felt was the correct way in terms of changing our communication strategy. I think we accept that that in the past that we've not always struck the correct tone in terms of communication, especially on Twitter, and as a result, what we decided to do is our communication is becoming more formal. And I think it's also felt from the board that it's not common for management to provide running commentaries to investors, and clearly when we have something of significance to say, we will say it, and we will share it as quickly as possible. I think the other thing that I did notice, and I'll just wrap this into this question, is there was a lot of criticism around Walbrook as well. I think we've got to be fair to Walbrook here, and I've mentioned this before and I'll mention it again, is that at the end of the day, we are responsible for our communication. It's not Walbrook. They're only as good as the news flow that's coming. Clearly, there has not been a lot of news flow for a number of reasons over the last few months. So they can only work with the material they've given, and also in terms of what that communication is, it's the company that has the final say on how that is communicated as well. So again, I'd just like to address that. I'm pretty sure that's probably not what you want to hear, but I think we've got to be quite clear in terms of how we want to communicate and what we think is the most appropriate, because we had a lot of criticism in the past around basically overhyping or whatever. So we have taken that on board, and this is a position that we will have moving forward. So I think in terms of what I'd maybe do, given the time, we're just about 10 minutes over. I'll just finish up with one last question. I thought it was probably a good one to end on, and it will really repeat what I said at the start of the presentation. But again, I think it's worthwhile to end on that note. So again, can you offer anything that is at all positive to shareholders? Share prices, obviously when the person wrote it, was near placing price and continues to fall. Company is silent. There's no institutional investors making moves to buy the stock. This is completely at odds with the positive statements made by Omega earlier in the year. Why should potential shareholders buy into Omega Diagnostics? I think in terms of why should potential shareholders buy into Omega Diagnostics? Well, first of all, let's again address clearly, shareholders' disappointment in terms of lack of progress with DHSC and COVID in general. I think that's a fair criticism, and especially around the Department of Health. We share that disappointment. I think in terms of, hopefully I've given you a good feel. We said back in July that in terms of our own product, we expected demand to come from self-test in particular. are still waiting for that to approve. Once that's approved, we do expect to see commercial gains through the partnership we have with Lansdowne. I think I would also add in terms of the dam health was something that, because they can sell professional tests, was in effect an added bonus for us. And I think the relationship we have with dam will be a positive one that we'll look back on in the coming months ahead as being a good agreement that we've signed. And then in terms of the other parts in terms of our core business, again, I'll just reiterate, CD4 is making great traction. We've got NGO support around this, is backed by the World Health Organization. We do expect demand to get to 4 to 6 million, and as you saw in the recent results, the revenues were around 200k, so significant upside in terms of potential revenues for that product. I think in terms of health and nutrition as well, it's back up to those pre-pandemic levels. So we expect to get that double-digit growth. We've got a strategy in place that will really drive growth, whether it be through menu or geographic expansion. So I think overall we've got a core business that more than supports the share price we have today, and with lots of growth potential. And throw in the potential of COVID around our self-test and what DAM can offer us. I do think that we have a very good offering to shareholders. So just on that, I'd like to thank you for your time you've taken. And as I say, we will answer all other questions over the coming days and hopefully get out to you by the end of next week.
Colin, Chris, thank you very much indeed for updating investors this evening. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Amiga Diagnostics PLC, I'd like to thank you very much for attending this evening's presentation. That now concludes today's session. Good evening, and thank you again for your attendance.